If you're listening to this, there's a good chance you work within the real estate investing industry. There's another good chance that you would like to increase the sales of your products or services. Well, you're in the right place. United States Real Estate Investor is a platform you need to place your brand directly in front of your target audience. With our focused, growing audience of real estate investing beginners, enthusiasts, and seasoned professionals, you can continually reach our captivated viewers and listeners with ease. To learn more or to get started today, just visit UnitedStatesRealEstateInvestor.com/advertising. That's UnitedStatesRealEstateInvestor.com/advertising. Get ready to increase your brand awareness and your bottom line. Attract clients with content.
Universe, media, network, 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 network.
Hello and welcome. My name is Crystal Stranger and I am filling in for James Brown here on This Month in Real Estate Investing. So happy to be with you today. We have a super exciting show. We're going to be talking about the recession fears and how this is shaking investors, and let's go into how you can profit from the coming recession, right? Because challenging times always means plenty of opportunity. We also are going to dive into how LA is freezing evictions again, and they're halting rent collections because of the fire. So how do you protect yourself from these issues as a landlord? One more major item that you got to hang around and check out is Congress has introduced a bill to stop foreign adversaries from buying U.S. land. So how is this going to affect the U.S. real estate market? You will hear from me and our illustrious guests today as we discuss this topic and all the news, everything you may have missed this month in real estate if you weren't paying attention, right? I'm not always paying attention, and this is great to dive in here and get to see all these items. So let's start the show. All right, before we jump into the show and do introductions, I want to share some exciting news that all U.S. real estate investor content is now also streaming on Real Estate On Air FM at EXP's realestateonair.fm. So if you want to check out a new streaming location, you can go there and view that. Now, let me introduce some of our amazing guests we have today. First of all, we have Tapan Trivedi. Tapan has over 14 years of investing experience, focusing on short sales and rehabs. He's also transformed this knowledge more recently into a company providing data analytics to help investors find the right locations to invest. So, Tapan, I'm super happy to have you here. Do you want to say a little bit about that for a moment and tell everyone about wheretoinvest.io?
Of course, yes. Thank you for having me, first of all. This is so much fun. Early Saturday morning, nothing else to do because we are entrepreneurs, right? That's what we do. Yep. And so wheretoinvest.io, there's roughly 1/3 of the US population right now, 110 million in about 180 metro areas out of 380, where buying a home or buying a rental locally does not make any sense cash flow wise or safety wise. Like, for example, where I live in Sacramento, California, if you have $100,000 to invest, you can buy like one house, it'll cash flow like $300 a month. But if you take the same and go to Ohio, you can literally have $3,000 a month in net cash flow coming in. So it's not even a contest. Most people don't invest. Like 93% of all real estate investments are local, within 1 hour driving distance of the primary homeowners' residence.
Yeah.
And it's because we just don't know what's going on out there. So our data allows you to confidently make a decision in like 2 minutes. Within 2 minutes, anything listed on Zillow, Realtor.com, if it looks like a decent, you just drop the address in and apply our methodology, and within 2 minutes, you'll be able to tell whether it's a good place to invest or not.
That's super exciting. You know, I've played a lot on different data platforms. I used to get a lot of my data off Esri. I don't know if you ever used that, but I used to go in and do like their map search and pull a lot of
Esri was
traffic.
one of the data providers that we looked at. Yeah.
So I used to love that when I was
and that's the thing. It's just
there's so much data out there.
Everybody knows how to get it out there. Yeah. So it's like, what do you need to make the decision quickly? And then, there's one major competitor that we have, and they raise their prices. And I kid you not, this is the thing that can happen in data platforms, 43 times.
Wow.
43x. They used to be X and 43x, and they're located close to where you are actually.
Wow.
So yeah, they're from Boston.
That's definitely gonna change the demographic of who's buying it. They must be shifting from kind of a B to C to B2B business model then, if they're making that shift. But yeah, it's super interesting. Definitely, I want to hear more about that as we're going here. But before we do, I got to introduce Dave Seymour. I'm so excited to be hosting this and have you on the show. You have no idea. I mean, Flipping Boston, I think it was a little underrated, actually, of all the shows out there. But it really was, I think, the most believable and realistic, like the nitty gritty of what it is, not the sugar coated, like we went out and we bought this house. Look, we put a little lipstick on it and made $150,000. Like that's not super realistic. Like you guys got in there and like got your hands dirty, and it was kind of amazing. But then you also recently have made this amazing shift to Freedom Venture, where, from what I've seen about that, now you're working with hedge funds and large investors and bringing that knowledge, that down-to-earth knowledge. And I just think that's amazing. I want to hear about this.
Yeah, Tapan said something pretty interesting when you first started talking, and you said, Saturday morning, nothing else to do. That's what entrepreneurs do, right? So entrepreneurism is a terminal illness that will take your time, it'll take your sleep, and it will reward you over and over and over again. And look, Freedom Venture Investments is, as it stands today, is pretty much a private equity firm, raising capital, deploying that capital into a couple of different areas, primarily Southwest Florida. And that transition from the construction guy that you met on Flipping Boston, that transition from that world, that environment, to where we are today, dealing with millions of dollars and tens of millions in many examples, is it's born out of entrepreneurism. It's born out of challenge. For me, I can flip a house with my eyes closed as long as I get it for the right price on the buy side. It's it doesn't get my heart rate up anymore. So I'm always looking for a challenge. I'm looking for delta opportunity, and that's how Freedom Venture came about. And in alliance with that, the education arm of Legacy Alliance has been a really exciting project as well, because I've got a pretty heavy background in the education space, and it feels really good to bring all of those years of experience and put it out there for investors to be able to get the right data, right, the right information, the right strategies, learn them, deploy them, and potentially partner. So yeah, it's an exciting time for us right now.
It is. That sounds super exciting. And, one of the things that that I thought was so interesting. When I added you on LinkedIn, in your education section, you wrote that your education is the school of life. And I think it's so amazing now that you've taken that into this hedge fund world, because it's like another example of that, like from like the tech world. It's so common in SF to be, the like, hands-on entrepreneur, then going on to run like CEO of multi-million-dollar companies. But I feel like you don't see that as much in other industries. And there really is, demand for common sense that at one point in my life.
Thank you. Yes.
Yeah.
Yeah.
So I think it's really, really valuable. Yeah.
There's a lot of, and I think you guys will agree, right? Prior to us starting the stream today, it was like, hey, do you want to stream this to your social media, right? Do you want to stream this to your audience? And if we look at the society in which we live today, common sense, fundamentals, I'm going to get a little political, decency, a lot of these things fall through the cracks, right? Because he or she who makes the most noise becomes the expert. And just because you've got a huge marketing budget and you make a lot of noise, it doesn't necessarily mean that common sense is at play. Doesn't necessarily mean that the fundamental. Look, in the capital raising world, I have one job, and that's not to lose the money and to be a steward of my investors' capital. Whether they're hedge fund type guys, high net worth family offices, or whether it's Joe Blow, the business owner, who's just got maybe $200,000 or $300,000 that Joe wants to put to work. So I cannot and will not afford the opportunity of, look at all the money and my private jet and my Rolls Royce and all of that BS. I'm not playing. It's not my world. You'll never see me.
I can't wait to hear your opinion on some of these news stories.
Regularly.
Yeah.
We definitely have to that. Yeah.
Yeah.
I regularly tell my daughter that if you ever be doing something like that, like, just do something because aliens have abducted my body and something's going on. Like,
it's amazing, right? So at the end of the day, we are salesmen and women, right? I sell something, and how I approach that sale depends on my look. I'm not in a world of tearing somebody else down to build me up. I don't want to play that game. I'm too old to fight in that sandbox, right? I don't have to get in the ring and throw mud around. But when I'm sitting in a world where I see everything is the sell, the hook is based on greed, is based on beating somebody else down, it doesn't sit well with me. I've kind of put myself in a position where, especially in these high net worth worlds, man, it's like some of them don't like to see me coming because I'm a blue collar guy in a white collar world. And your opinion doesn't matter. Other people's opinions of me are none of my business. I'm almost 60 years old. I'll let you in on a little secret. I don't care. I don't care. I don't care if you came from Harvard. I don't care if you come from Yale. I don't care if you're the best SaaS service provider that walks the face of the earth. Your leverage is not your leverage. Your leverage is, can somebody put their hand up and say, I trusted you. I trusted your service. It executed. You did what you said you were going to do. And we all did well. If that's who you are, welcome. If you're money, private jets, Rolls Royces, sitting by the swimming pool with a couple of bikini honeys, stop it. Stop it, you donkey. Stop it. That's not the way this world was meant to turn. So, wow, I'm going to have to go get my soapbox. I'll be right back. Man, you got me going already. Wow.
All right. Well, let's actually, can we jump ahead and jump into the news stories. We'll cover them in order.
Let's do this.
So let's enjoy all this because we could just talk all day, I think. And, this would be great. So hopping in on our first news story of this month is Recession Red Alert. America's economy shrink sparks panic among property investors. Ooh, the scary times announcement, big headline. Everyone's losing their shirts. So the summary here says, fears of recession tighten their grip on the U.S. economy. Property investors are bracing for impact. GDP contraction, rising tariffs, demographic shifts, and shaky financial policy have sent market signals into chaos. Construction costs are climbing, interest rates remain high, and investor confidence is cracking. Still, smart investors are fighting back, pivoting towards defensive strategies, stockpiling cash reserves, and focusing on stable rental income. With threats to affordability and shifting demographics reshaping demand, the housing market is in flux. The storm may be fierce, but for those who stay nimble and alert, 2025 could unlock rare opportunities for long-term wealth. So, I mean, first of all, I don't know about you guys. I mean, I'm sure both of you have a lot of experience with, flipping and different things in the real estate market. And, real estate's one of those things where you can make money good times, you can make money bad times, you can make money flat times. It's not as volatile, in my opinion, as, say, the stock market, or we talked about cryptocurrencies earlier before we got started here. You want to talk about volatility, like that's where you can really lose your shirt or, get 1,000x. But from my experience, real estate isn't like that. There's so many different ways that you can invest. The key is just to find the right one for the time period. So what do you guys think of these challenges that are on the horizon that people are reacting to? What would you think are good ways to benefit and profit from this? Because challenges always have opportunity, right?
Sure. Tapan, go for it, man.
Right, let's do this. So here's the deal, okay? First of all, this is on May 9th, just 4 days back, JP Morgan dropped from the probability of a recession from 60% to 40%. And I have this open right here because I knew this was coming. But the deal is, if you're investing for long-term growth, then a recession is just a blip, right? I mean, and quite frankly, most of us would be happier when, in terms of if you're talking about asset purchasers, right? As ourselves as asset purchasers, like Dave said earlier, in real estate you make money when you buy, and then you do everything in your power not to lose it till you implement the exit strategy. So during a recession, a lot of things are on sale. So if you're cash heavy, like a lot of people are saying, you can just transform your asset from one to the next. And essentially that's what we're doing, right? I mean, exchanging one form of assets to the next, to the next, to the next. And once you have like your 5 to 10 houses, you change it into your nice little hotel or some sort of apartment syndication or whatever. But during the recession, don't wait for it either if you're investing long term. But at the same time, because these recession fears have been around since 22. Ever since we got out of COVID, there was still all throughout COVID, there was also recession fears. It's going to happen. It's not going to happen. But at that point, we had no idea what to do. But once we came out of COVID, that's an absolute flashpoint that we can say, okay. And we had fears at that point too, but nothing happened. So what? 3 years people shouldn't invest, right? So
yeah, well, I've always seen fear as opportunity. It's like where there's risk and where other people are afraid, that's the time to buy, right? You buy when people are fearful, sell when they're greedy, right?
That's a Buffett quote. When everybody else is greedy.
Buffett quote, yeah.
Yeah, but it applies.
Buy when there's blood on the streets.
I think it applies to real estate even more than to stocks.
It was a lot more graphic.
Yeah.
We look at you're going to love this. Don't go asking me for what the data points are, because that's not my part of the business. My part of the business is to do what we're doing today. But a lot of those data points really tell us where to deploy capital. So I talk about, we'll use multifamily, right? Commercial real estate. during a recessionary period, we're probably not focusing on retail, right? We're not focusing on, your average strip mall for obvious reasons. If we say it's a recession environment, then that discretionary spending isn't as prevalent as it was, at the high times, for example. So where do you go, right? As an investor, if you've got any financial intelligence, you know that capital wants to move. It doesn't want to sit still. It wants to be in motion. So if capital is not in motion because it's riddled with fear, it's losing money. In the inflationary environment, if you're, sitting in a 3%, 4%, and you think you're doing okay, you're probably, devaluing the value of that dollar every day, sitting still just in the inflationary environment. So, all of those pieces of education come into play. So that the question always needs to be begged. Well, if I'm that individual, if I'm that, that high earner, whatever the case may be, I'm that accredited investor, I'm sitting on a 401k plan that's, been ripping me off for 25, 30 years. What do I do? What do I do in a recession? What do I do to velocitize my capital? What do I do? What do I do? And, we talked about it a little bit. There's all kinds of shiny objects out there. I don't want, nor am I interested in shiny objects. I like fundamentals. I like what I call the Clydesdale of real estate investing, multifamily, slow and steady, repetitive, not overly risky, because the number one bill or expense that statistically gets paid first in all environments is housing, right? We need a roof over our heads. What that housing looks like depends on where we are in the market cycles. Buyers 1, 2, 3, and 4. Sellers 1, 2, 3, and 4. Where are we? What phase are we going through? And being able to identify that. And I think a lot of, and again, I'll defer to you on data, Tapan, but I can only. I'm not going to use the word predict because it's not predictions. They're based on pro formas and experience, but I can determine and begin to feel a market based on my experience, right? The past will always predict what my future is going to look like. So when it comes to recessionary periods, let's go back to, 2007, 8, 9, 10. I was in the business, right? I was a short sale loan modification individual and learned that investment strategy, learned it well, got traction with it. So today, recession, no recession, for me, I don't care. I'm going to buy a piece of real estate. I'm going to reposition that piece of real estate. I'm going to give tenants decent, clean, affordable housing. I might not make as much as I thought I would because of, rental challenges, whether they're stabilizing, whether they're reducing a little. But if I'm on the right side of the buy every time, I'm going to be okay. So look, a recession is a recession. What does that mean in a community? It differs. It differs by community. LA has a different recessionary experience than, New Jersey.
Well, there's some areas that have been in depression for 50 years, It can be very regional. There's some areas that don't seem like they're ever really touched for it, because there's always high desirability no matter what else is going on. So there's certainly a lot of regionality, but I do love that slow and steady approach. It's like you're the Benjamin Graham of real estate investing.
Yeah. Take it easy. Right? Take it easy, man.
Dave, it's
take it easy.
It's interesting.
So we
you're
have
talking about
and technical investing here. I love it.
No, but we actually agree. So the method that I have to evaluate a location, it goes size, economy, crime, residence, real estate, equity and cash flow, team building, and then swings and trends. So the first 5 are all fundamentals. You evaluate for the fundamentals first, and then you go ahead and see which way the wind is blowing. Because a lot of times, and this is where we agree on the fact that a lot of people are like, oh, the rents are increasing out there, and the property values are falling, and this and that. Yeah, don't. So what? Your property values are falling phenomenally. But crime is increasing. So do you want to invest there? right? Go with the fundamentals first. Make sure that it's the right size. It is that it has enough industries that if one industry goes down, it doesn't take down the entire metro area with it.
Detroit.
Right? I mean, go for the fundamentals first. No, Detroit, yeah, right. And to for what it's worth, to Detroit's mayor's credit, Detroit only has about 28% in auto industry now. So if entire auto creation industry goes down, Detroit's still okay. And because they made a concentrated effort in the last 2 decades to attract more investments there. But yeah, that is definitely
they also
that we
entire
look
blocks
at.
of slums and things like that. They did a lot of things. So.
It's interesting that whole concept, right? This regentrification. We're going to take what doesn't work and we're going to change it, and we're going to, we're going to go on a tangent. I guess we're just talking. We've experienced some of that here in the Boston market on the residential side. We saw East Boston, Chelsea, Somerville. These are all, burbs around Boston Central. And they used to be really tough hoods. I mean, they were rough. The city of Chelsea went into receivership. I was actually working there as a special police officer many, many years ago. So it was managed so badly that the state took over the city. And if you try to go to Chelsea today, you're going to spend $750,000 to $1 million for a 2-bedroom condo. So again, to tie into recessionary, right? An experience for one person is very, very different for another, depending on, where they are economically. The yuppies in Boston are not going to feel the same recessionary environment that somebody working as a service provider, for example, in that same neighborhood. So we try and recession proof how we invest, right? We try. If you're in retail, you try and get retail stores that are internet resistant. Okay, barbers, nail salons, things like that. We try and do the same thing in real estate to recession proof ourselves as best we can. And for us, we focus on what's called the missed middle. I want to build and I want to rent to what we call workforce housing in the Florida market. That's cops, that's firefighters, that's nurses, that's not, the drink with the umbrella by the side of the gated community pool, right? That's not where we invest with. So it's a good conversation, but there's a lot of clickbait.
Sure. I mean, nurses and firefighters, they're always going to have jobs, right?
Yeah,
that's not where the cuts are going to be. So that's
for sure.
A good point of looking at your demographic and who you're renting. Yeah, but I think a thing about, or an aspect of this that we haven't really discussed, or I don't really hear anybody talking about, is inflation and how it kind of is a double tax on real estate investors. That you mentioned, like, it came to mind because you mentioned like people having the safe and secure like 3 or 4%. Well, that 3 or 4%, you're not actually making 3 or 4% because you're paying tax on that. So you're making, maybe 2 or 3% on that same money in the bank. And a lot of times real estate can be tax advantage depending how you invest it, what you do. But even at the time when it's an asset and it's going up in value and it's a good store of value to own real estate, which I would say is a good reason actually to be buying real estate in the right areas, right? We're all kind of saying the same thing here, like buying in the right areas that are safe, have reliable jobs for people. You can have good, solid tenants in. I mean, it's a great hedge for inflation. But eventually when you go and sell that property, if your property doubled in value because the currency dropped in half, you're not really making money at the end of the day. You're actually losing because you're going to pay tax on that. So how do you guys approach that with, your own investing going forward and how you think about that? So
it's tax deferment. Don't ever sell real estate unless you have to. Yeah. Let's just be frank, right? Let's just be frank. Yeah. We can mess around with it a little bit. Should I wait to buy real estate or should I buy real estate and wait? That's always been the question. The answer to that is pretty
I
clear
love that.
once you get some experience under your belt.
Yeah.
I had an investor that came into one of my deals. Incredibly intelligent guy, working at a very well-known, highly visible title insurance company. Probably $1 million plus on base, plus commissions. Let's say 2.5 mil, right? Not a bad way to earn a living, right? Selling insurance. And he'd never done a deal before, and we were having this exact same conversation. And he's like, what's the worst case scenario for my 100,000? And I said to him, I said, look, SEC, Securities and Exchange Commission, says you can lose every dime. And I'm telling you right now, you can lose every penny that you put into a real estate transaction as a syndicated investor. I said, if Dave and you are just shooting the breeze a little bit, I tell you, just get your money back. I don't know. I don't know the truth to that answer, but what I do know is that, if it's sitting still, it might not do anything. And he said to me, he's like, well, if all I can do is get my money back, he said, I might as well leave it in the bank. And I was flabbergasted that was the response. And there was conviction when he said it. Again, highly intelligent, degrees up the yin yang. I don't know whether he was from Yale. He wasn't from jail, but, it was like there was conviction in that education. There was conviction in that education. And I just said to him, I said, in the bank, you're earning 2.5%, 3%. You could put it in a CD, a certificate of deposit, otherwise known as a certificate of death to guys like us, right? You could put it in there. I said, but if you earn 3%, but inflation's 7%, what are you doing? What are you doing? And it was like a moment of clarity.
The value of the money, right there.
Yeah, it's that moment of clarity. But again,
no matter
there's
how
so much info out
educated
there,
you
which is
are.
bad.
Yeah.
Go ahead.
So risk tolerance is a whole different ball game, right? I mean, just because you have a lot of education doesn't mean, like, somebody with your background, like a firefighter, cop, you will have a lot more risk tolerance because gut in your gut that this is not as bad as people think it is, right? And a lot of people with degrees, they do have the analysis paralysis. So, at one point you need to cut through all the noise and take action. And that's the thing you just said, that once you have your first 3 or 4 properties, then you kind of understand in your nerves what you're doing, because till you just kind of swimming, barely keeping your head up. But once you have that, then you can understand you see some forest for the trees. So that's just my 2 cents.
No, I would agree.
Yeah, I mean, it's one of those things where you have to be in the game to win it. I realized I didn't really I introduced myself at the beginning very well, but I bought my first house in 2002. So I've been in this game for a really long time, right? And there were so many people over the years of like, why don't you buy something? Like, you're moving somewhere new, it's still affordable there. Why don't you buy? Oh, I want to rent for a couple years, see if I really like it. But by then, like, most of the time, if you're moving somewhere cool, you're going to be priced out of the market, right? So you got to like make those decisions and, get in the game at some point. A lot of people are so risk averse that they end up losing their money just from not making decisions or not doing anything, right? And
it's also a huge lack of education. Let's just be frank, right?
It is.
Watch any news media outlet. Ignore whatever they're saying on the news media outlet and start paying attention to the commercials in between. Okay? Start looking at the ads that we receive bombarded into us day after day after day. The one that I'm getting a chuckle on right now is Carl, the #1 broker, right? And his nemesis is Schwab, right? and I'm Jimmy Joe Numbnuts. I'm sitting at home and I'm listening to this commercial and I'm like, okay, if I go to Schwab, they're going to do better than any other broker out there. And then you start to look at the services that are given by every house out there. There's nothing, there's no secret sauce. There's no, when you do better, we do better. Follow the green line, you idiot, and your life will be perfect. I mean, for me, coming from that blue collar background, when I started to get educated in finance and real estate, et cetera, there was like this whole new world that opened up to me. And I began to identify and see the predatory environments. So, from a biblical...
I don't know. Yeah, I mean, Carl sounds like he could be pulling some kind of Ponzi scheme right there. And
right.
I have to say, I like Schwab. One really great benefit of Schwab is they let you take money out of any ATM worldwide with no transaction fees at prime rate. So
what are you saving in transaction fees from an ATM and Schwab? How much are you saving?
I save about $75 a month.
$75 a month.
Good. I'll give you $75. Give me your money. I'll do better than Schwab. 100%.
Yeah.
It's better than Schwab, yeah.
All day long.
Yeah,
all day long.
Like
all day long. We can almost guarantee you.
Yeah. Well, I mean,
allow me to. There's one more
like
thing.
An ATM card and things. You got to have a bank somewhere. Well, actually, you don't maybe anymore.
Dave, Dave, I've used this as an objection annihilation for a long time for people that bring up mutual funds. Do you know who John Bogle is?
I do. I know Jack Bogle. I've
John
trained
Bogle,
under Jack Bogle. I love what he did with the 401k.
Yeah. Right. So John basically created Vanguard. I don't know if it's still the second or it's the first, but a mutual fund in I guess the entire universe, our known universe. But he wrote a phenomenal article that says that the entire mutual fund industry exists to rip off the customer. That had you not had the mutual fund industry, they would make, and I kid you not, 120% more over the lifetime of the investment. And that is somebody that is starting at 28 years, starting investing about $500 a month at 28 years old. And he just lays it down. And I always say, don't listen to me, this guy. I have that article printed out, and anytime somebody comes up with mutual funds, I just say
mutual funds versus real estate. I mean, you gotta have money somewhere to be, having cash, storing money, moving it around from investment to investment. I mean, we all have to be functional. I don't want to join the ranks of the unbanked, even though that's quite a high percentage, I think, in the US right now. And I don't think that's, going to help this advantage. But let's not bash any other type of investing. Like, all investing is good in its own ways at the right time.
No, it's not. No, that's not a true statement. That is not a true statement.
What do you think?
You just said all investing is good.
I have lost money. I have heartaches and heartburns against that statement. I've actually come up with things like
I didn't mean it that way.
This is what I tried to do and fail.
I mean it that at the right time and done the right way. You gotta have the time to invest. You gotta put your due diligence in. You have to do it well. But there's always ways to profit in all these many different kinds of investment. We've just found ones that we're really good at and provide us a good way of life. It doesn't mean what someone else does necessarily bad.
So you said something, it's not a backtrack, it's a clarification, right? You said, I feel like I'm an attorney now. Your Honor, you stipulate that the young lady in the stand said, you said, your due diligence, your understanding, your perception of what it is that you're doing. It is a fact that the number one retirement vehicle in the United States of America is the number one misunderstood retirement vehicle in the United States of America. I don't care who I talk to. If I ask them, what they're invested in, why they're invested in it, what their return profile looks like, what they made last year, the year before. Are they trending up? Are they trending down? They have no idea.
Really?
And yet they all signed
Wow.
up. They all signed up for the company 401k because everybody else signed up for the company 401k. And to Tapan's point, if you research, there's a documentary that was, I don't know, maybe late 90s, 2000s, maybe a little later than that. It was actually a PBS special, and it was called
The Retirement Gamble.
The Retirement Gamble. You can't afford to retire. And they really delved down into that. And that was the first time I got to experience Bogle. And then I started reverse engineering my own life into what I had done prior to releasing into the world of entrepreneurship. And I wanted to go back and punch a few individuals right in the chops for the BS that they had sold me. But then I had that, again, a moment of clarity where I went, well, who's it really on? Who's responsible? And I remember one of my mentors early on said to me, David, if you don't pay attention to your money, I promise you, kid, somebody else will. And that resonated with me. I understood that. I understood that compounding costs smash compounding returns. Smash them. Smash. What does your broker take? What does the fund manager take? Oh, he takes, 50 bips. Okay, so a half a point. Okay, what does that do over the time of an investment when we're looking at compounding costs over compounding returns? So all of that conversation fueled me personally to be doing what I'm doing today. So, I get, you get a little, shekels get up just a little bit. And it's not,
Interesting.
It's not at you. It's at a system that has a bigger marketing budget than I do. Everybody who has money in a mutual fund pays an advertising fee in their mutual fund to the fund managers, every single one of them. And one would say, well, why am I paying an advertising fee? So that they can drop X amount of millions of dollars at a Super Bowl on a commercial to sell more 401ks, to sell more mutual funds. And they're doing it with your money in the first place. Hercules, Hercules, Hercules. There's a plan, right? There's a plan. So that gets that's the thing. It gets a little angsty for me over time.
I don't know. From my side, though, I'm a enrolled agent. I've been doing tax for many, many years. And the aspect that normally gets me up in feathers about that is when people leave their jobs and they turn the 401k over and give them the distribution from it, and they don't realize they have a 20% penalty tax on top of that suddenly being considered income too.
So they don't advertise that on the way in.
They're paying, 40% on that when it comes in. They often don't have a cost basis numbers.
I'm going to go back to the documentary that you were talking about, Retirement Gamble. The journalist, they showed that the default where they put your money in, people have no idea where it is. And he said that, if you are in this particular location with this particular, and it was CalPERS for them, and it was like, you will be in Fidelity. And the journalist went and looked for his own. And he was like, it is exactly what this guy said. And he was like, I am down 42%, and I had no idea.
Right.
And this is the guy who is actually making a documentary. So.
All right. Well, let's move on and talk about the next news item.
You want to go to the next story?
We can get into more excitement of talking about all these scams and people taking advantage of money. But the next one is actually the only slightly real estate related. It's the Alexander brothers, who are luxury real estate brokers, face new charges in New York. So I don't know if you guys know about these guys. I guess they were on TV at one point. Oren and Tal Alexander with their brother Elon are facing additional sex trafficking charges in New York. It was kind of interesting. So it's a small, very, very small world. I lived in LA, and partied with the umbrella private jet type for quite many years. And Oren, I actually knew is like a friend of a friend. So I'm like, surprised, but, he also like, I mean, that kind of crowd, like people can, be the super hot kind of douchey kind, and then they can go down very dark rabbit holes when they get a little older. So it doesn't surprise me that much either, to be honest. But it's crazy. The new indictment was actually for human trafficking or sex trafficking, and I was reading into some of this though, and it's kind of funny, like what goes is that, and this is maybe a cautionary tale for anyone in that jet set lifestyle, that the sex trafficking charges are from FBI wiretapping, where they were looking at their phones as they were talking about flying a bunch of women down to Tulum for like a party they were having there. And it's kind of crazy, like things that can seem a little innocent on their surface, if you're, saying kind of douchey things and messages, whether or not there's any truth behind it can definitely be read into it, that, in kind of sketchy ways. So, there probably is some truth behind it with 60
whole different section of they're selling luxury real estate. Like we try to make sure that we put up PPMs with big bold letters, and we are in such a different space than these guys, all of us. And it's like, when it comes to that, there's got to be a lot of evaluation points. Oh, maybe I should stop here. Maybe I should stop here. Maybe I should stop here. But if you break through all of them and keep going, I don't know. Maybe you deserve this.
Well, this is that flashing the money around.
Like, at what point
people think they're invincible at a certain point.
I
see it.
I saw this kind of crap in the TV world. The reality TV world is kind of mirrors some of that, $1 million listing and Real Housewives of wherever, right?
Yeah.
Basketball housewives. You've got all of this garbage that is consistently being fed through the TV, and you would see people with humility start this journey, get a little fame, a little traction, and turn into idiots. I mean, I watched one young lady come in. She was with us at a couple of events in Las Vegas, and she was super humble. Her mom was at this event, and her mom and I were shooting the breeze. I think she was from the Midwest, this young lady, super humble. The TV stuff goes on a trajectory. And I think it was 8 months later, I see her show up again at an event, and she's got a freaking poodle or a Bichon Frise or something under her arm. She's got a Gucci how do you do on the other arm. She's got a couple of, entourage people taking notes. And it's like, what is going on? Where is the faith? Where is spirit? Yeah. Where is goodness in all of this silliness? So a guy said to me one time, if you're an a-hole and you're broke, you're just a bigger a-hole when you got money. It's it will uncover the truths.
Money is a magnifier.
Yeah, it's a magnifier, brother, for sure. So I don't have any patience or tolerance for those people. So I hope they get whatever's coming to them.
I feel compelled to just one thing. Literally, after I got 1.2 times my expenses done, I quit everything to pursue a dream, and I did stand-up comedy as my full-time thing for 3 years.
That's awesome.
Absolutely loved it. But the point I'm trying to make is I traveled with Robin Williams for 14 shows.
Oh,
hung out with him.
I love that, dude.
The whole thing. And
wow.
Talking about partying, there's nobody that can genuinely tell you about the horrors of partying as he can. And he basically, the first time that I traveled with him for 6 shows, I came back a whole different person, because till that time I'm like, oh, I'm gonna do this, have fun, this, that. It's not a big deal. And then when you listen to him, it was like, oh yeah, these things can happen. So I'm like, I am done. The next 8 shows that I did with him, where I just want to learn the craft, show me what it is, and it was a lot more focused on tape the shows and get feedback and this and that and all those things. So I grew a lot with my craft at that point. But the point
awesome.
is, that's why I said that, there's always, when you're going into that rabbit hole, life presents you with, should I be doing this? And you just blow through all of those. This is why this happens. So
I got sober at the age of 23. I'm now 58. So do the math. It's been like 35 years for me without a drink, a drug, a mood, a mind-altering substance. So when I ended up in, that world, the Vegas world, I can't tell you, it would happen quite frequently. I'd be getting some sunshine at 5 a.m, and somebody from the environment in which I was in
talking about mind-altering substances. Let me get some coffee.
Yeah, they'd be like, I can't drink anymore, Dave. Can you help me out? I woke up in the wrong place.
The funny thing about it, though, is like money is often like an enabler for that kind of attitude. It's like, my mom used to say, like, people who are poor are just weird, but people who are rich, they're eccentric, right? So people like put up with it, they enable it, they allow them to do it. And, it becomes that like roller coaster people have to stay on. With that in mind, I think we should talk about the next one of these, which is the next news clip is real estate developer admits 13 million years-long investment fraud. So this is another similar type of story, but on the other end of that spectrum, where 75-year-old Hudson Valley developer Barry Bremen orchestrated $13 million investment fraud, luring over 30 victims into fictional Latin American real estate projects. So it's interesting. I did a bit of research on this, and Barry Bremen actually was a legitimate promoter of these Latin American real estate investments for many, many years. And then in 2018, his real investments started to go downhill. And to save them, he started selling full-on fake partnership interests in properties. One was like a business park in Costa Rica. Another one was, I think, a big multifamily investment in Puerto Rico, and completely fabricated with fake brochures, fake everything when I researched into this. So I thought, wow, that's really the other end of the spectrum, right? When someone's so used to having that money and power, they can't let it go. They can't honestly fess up to it. What do you guys think goes on when people just lose it like that? Because this isn't the standard Ponzi scheme where people kind of set out to do fraud. This was someone who was legit and shifted gears.
Bernie Madoff is the name we all know. And yeah. Bernie just took what you described and put it on steroids. Because if you research Bernie and what he did and how he did it, he started legit. Now, something happened. I'm not going to say any more than that. I don't know. Something happened where the results business became more important than the fundamentals that we've talked about, especially in that world. So when pride and ego become the dominant forces in anyone's life, it's a formula for what you've described here. Ego, EGO, stands for ease God out, right? As soon as somebody thinks that their greatness is superior to anything else, you're in trouble, dude. You're in trouble. So something like that hurts my heart because it shites all over our industries, right? It craps all over our industries. Real estate is a scam. We'll hear it over and over and over again. And it's because of individuals like that not knowing their true
at one point
value.
You gotta be willing to shut it down. So, Dave, 2013, 2014, in Sacramento, California, I ran hard money lending fund, and I basically pooled the money and had private investors, and we were able to give them 10, 11, 12% returns. It's because till that time, like flipping and especially doing second loans safely for construction was a genuine business. But basically the profits started evaporating simply because the margins just weren't there. And we started seeing deals, the flippers started bringing us deals. I'm like, this is not going to pencil. This is not going to happen. So basically we had to give our money back to our investors saying, this is the extent that we can take you and safely give you what we promised we would. But now the market does not, and I don't have the ability to do that. So
I've had to do
I have
that
a TV
before
remote.
too.
That's what I always say. If nothing else, I have zero.
Yeah.
I have zero problem going back and watching TV. Not that I'm a big fan, but I mean, I would rather watch TV than do that. I mean, that makes sense. Like at one point, you need to be willing to say, okay, I'm not. Yeah.
I have to say though, on this one, I feel like it was a real lack of creativity in a sense to do these like fake paper profits because I used to live in Costa Rica. I still have property there, and you can get real fake companies very easily. You could have bought actual land and just not had really anything come out of it and not been in trouble because a lot of things do go bad. And it's like he just must have been really bad at covering his tracks, is a piece of it too. But it is a shame. It does give us all a bad name. And it's hard. It's hard when you face those moments and do that. All right, let's, because we got to get to the break. So let's talk about one more of these news pieces here that is interesting. I hope
I've been waiting for this next one. Yeah.
Yeah, I hope this spreads to more states. So Missouri eliminates capital gains tax. Investors eye tax-free windfall on property sales. I have to say that headline I'm not so crazy about because it's not really tax-free. You still have federal taxes. It's in the U.S. So that headline there leaves a little bit to be determined, in my opinion, but. It is still helpful and beneficial that Missouri's decision to eliminate capital gains tax ignited a financial firestorm for property investors in Kansas City and St. Louis, with Senate Bill 46 poised to take effect in 2025. Now all individual capital gains, including profits from property, stocks, and even cryptocurrency, will be exempt from state income tax. So, what do you guys think about this? I mean, I've seen it going the other direction in other states where New Mexico has been talking about getting rid of their exemption for tax on selling residential property. So, it could go either way in different states, but that's a pretty bold move in Missouri. Do you think that's going to encourage people to invest there more?
So I'm reading, the one sheet as we're talking here, and I focus on, however, critics warn of serious consequences: lost public funding, increased market volatility, and potential wealth-wrecking missteps for unprepared investors navigating this uncharted and rapidly evolving landscape. Dum dum dum. It's again, I'm going to go back. Fundamentals 101. Buy right, whether I've got no tax or high tax, run the numbers, understand the valuation of the deal that you're looking at, get educated on the market. Number one rule of investing is know your market, know the taxation, know the mill rates. What's the residential mill rate? What's a commercial mill rate? Know what it is, put it in as a line item. Understand that some numbers are going to change. What's your fudge factor in any one of these deals? So for me, it doesn't make me want to run to Missouri and invest. I look again. I'm a line item guy. Does it
Hey,
make sense?
what is your fudge factor normally? I want to know what margin do you need? What makes it attractive to you?
Yeah, look, when I underwrite, even on a single family property, I'll underwrite anywhere between 7 to 10% of a fudge factor on my numbers. I just throw that in there.
Mm-hmm.
Sometimes that fudge factor is not used and we're good and we made a little more. Sometimes it's exhausted in the first week, right? It just is what it is. In the commercial world. Go ahead.
I can give you some secondhand knowledge. I have a student who has burned, I want to say at least 40 triplexes, fourplexes in the St. Louis area.
Mm-hmm.
And last year, they had significant hailstorms. Like the city went crazy. So what happened is that the insurance prices went up significantly. Like had he not burned his properties, he would be hurting a lot more right now, as are a lot of people. So there's a fire sale going on in St. Louis, at least right now, in a lot of properties. So the thing is, they're trying to attract people. Otherwise, I think they have certain neighborhoods, certain blocks especially, that would kind of they will have to be raised down. So they have the entire state. I don't think they're just looking at St. Louis, but
that's interesting that people are selling those.
Basically, that means that, if cash flow is shrinking,
because I mean, for me, like
at one point, it's like, why do I have this?
I was gonna say we had the same thing happen with a couple
cash
of
flow
our
is shrinking,
properties.
so this would make it more.
Oh, sorry, Tapan. I think
would be more attractive there. I think in St. Louis. I have a delay.
Yeah. Like I keep jumping in, and you're still talking because I don't think you can hear me there.
I'm still listening to your intro from an hour ago.
No, what I was going to say though is like the insurance thing's a big deal.
Apparently, Dave was on some flipping show or something. I understand.
I don't know. Whatever. I thought this was stand up. Let's just go to
check out the brick back, man. Come on,
I like my wood wall better than your brick BS, bro. Let me tell you, wood's where it's at.
This is not brick. This is a screen, man.
I know. And this is on a 4x8 sheet that just dangles and hangs off the wall. We all got game.
We have flipped enough property to know how to make a focal wall look awesome.
That's right.
All right. So on that, let's actually go to break, and we can all come back in just a second. Antonio, why don't you run that wonderful ad?
Are you worried about where your money is headed in today's unpredictable market? At Accelerated Capital, their investors tell them that safety and security are their highest priorities. They want to wake up every day knowing their hard-earned money is working hard for them. In the best interest of their investors, Accelerated Capital carefully vets every opportunity, knowing that most of their investors want to avoid risky strategies and stick with more boring but proven asset classes and strategies. Accelerated Capital's team of seasoned real estate experts and financial strategists value long-term relationships and transparency. They're also there to help investors find a fit for their own personal goals. Accelerated Capital has options for both accredited and non-accredited investors at any stage of their investing journey. Visit AccelerateMyCapital.com to download a free copy of The Astute Investor and join their Legacy Wealth Collective private investor club. Or click Schedule a Call to book a short Capital Accelerator call today. To get started, visit Accelerated Capital at AccelerateMyCapital.com. That's AccelerateMyCapital.com. Accelerated Capital. Accelerate your wealth with alternative investments.
All right. Thank you, Accelerated Capital, for sponsoring the show. We are all here to accelerate our investments, right? And
sure.
Yeah. So before we hop on to the next news show, I did want to touch quickly though on that last issue we raised about insurance prices, because I think this is a huge issue on U.S. property right now. I know that we've sold 2 of our properties in the last couple years because the insurance rates skyrocketed. They just skyrocketed on another property of ours. I don't think we're going to sell it, but the 2 we sold were actually really easy to sell because they're in like, one of them was in Colorado, the other was in a mountain town in New Mexico, and it was quite easy because they're desirable areas. But I'm wondering like how long that's going to go on for until buyers start looking at that more closely and really taking that into consideration on affordability, especially as interest rates rise. So I'd like to hear from you guys a little bit about that, because I think that's super interesting and timely. So.
Look, for us, it's a case of educating sellers. If you've got an uneducated seller, doesn't matter what any cost of anything is, if the seller believes XYZ is the valuation, right? Mm-hmm. So when you can show a seller what the true expense is to buy that asset from them, commercial or residential, you're maybe not going to get all the deals that you want. You might have to underwrite 200 to get one instead of 100 to get one. And if that's the case, do the work. Don't be lazy. Don't be the lazy investor. Oh, it'll be okay. No, it won't be okay. Insurance costs are not a small line item, no more than taxes are or expenses of any kind or nature. So,
well, and then how do you fudge for that though? Like, how are you planning for that as these costs are going to increase? Because these costs are increasing not just from events like we talked about. That's one big issue, but they're also increasing because replacement costs are increasing, right? Which should be driving up house prices, but I don't think have as much as the replacement costs have gone up a lot of places. So.
When you put it like that, Crystal, I think I'm going to quit.
I don't mean to quit. I don't mean to scare you. It's just,
I do it like that for a reason, right? Because the way that you presented that is the way that the majority of the information is presented. And it creates an immediate fear factor, right? What are you going to do? How are you going to fudge for the unknown in the future? Whether it's coming from you on this call or it's coming from any other source of information that's out there, I'm not saying it doesn't exist. What I am saying is do your due diligence and work. How many insurance quotes have you got? How many insurance agents are out there fighting for you? Can you facilitate multiple insurers on one asset? Ask me if that's possible. Yes. Welcome to Florida, right? Yes. So there will always be a way to get a deal done safely.
Yeah.
Whether it gets done safely or not, I have no idea, because I know that there are people who have purchased deals that we've passed on because we pass for insurance reasons. We pass for this reason, that reason. Somebody else can take that extra risk profile. I don't have to, and I'm not taking my investors on that journey with me, right? Does that mean I get it right every time?
No, you make it sound so scary, but then you're not buying these deals also because of that. So come on, don't pick on me about it, Dave.
No, it's not. It's not that I'm not buying those deals, right? There is a blanket statement that is made consistently, right? Real estate's a scam. Insurance is too high. Taxes don't make any sense. Nobody can do this. There's none of this. There's none of that. I did a call earlier on this week, and it was with a high-powered broker out of Manhattan, and his business partner was in New Canaan, Connecticut. And we went at it a little bit. We had a little rumble in the jungle, and it was good. It was good. He came armed with some statistics that would undermine our thesis. And I was excited that he did that, because what I was able to do was simply say, and the same thing in this conversation is, this isn't for everybody. Real estate investing is not for everybody. If the the negativity in them. And I'm not coming at you, Crystal. You're on my side, right?
Yeah.
I'll give you a big hug right now. I feel bad.
You know?
I'm giving you a virtual hug. There you go.
Thank you.
Like,
yes.
My goal is not to make anybody.
Just throw the messenger here.
Yeah. We can so good, right? The challenge is that messaging in the marketplace, if that's the only thing that's absorbed and listened to, and again, it goes full circle into the Schwab and the, Fidelity and all of that noise that's made there. It's hard to then get this message out there, right? Watch, listen, there are always deals to be done safely. They might not be in the primary markets. They might be in the secondary and tertiary markets where we find pockets of need outside of the big picture. We can go macro all day long. Let's go macro, macro, macro. How about going a little micro? What if you went to a local insurance broker? What if you went to a local bank? What if you went to a credit union? What if you started going in those places? He's got hallelujah. What if you go to those places rather where everybody else goes? And if you start to think that way, or more importantly, get educated that way, now you got a chance to make a living in this business. That's all.
I think also some of these can be signs that things are going to increase a lot soon. Because usually in the past, when I've seen that replacement values get above the value of housing costs, it usually is a sign that the housing market's going to take a big jump. Yes. And it has to keep up with inflation, So it's another.
So okay. When you talk about going micro, now you're talking my language, because our data literally gives you exact insight into actual known neighborhoods, right? We don't go zip codes, and we also give you geographic data. So like, okay, if there's one house right next to each other, but they are on two separate levels, this house, the one at a higher level, will have a lesser insurance cost than the one downstream
at a lower level.
For obvious reason. Sure. Things flow down. If something happens to this house, So insurance, I guess the actuaries, they actually know all these things, right? They have satellite pictures and all those things, and they know all these things.
Provides data on that, where you're not sideswiped in a deal when you're doing due diligence. Maybe you can find out information on that to give you advantage before you even make the offer. That's pretty cool. So
hence the company is called Where to Invest.
Where to Invest.
Very on the nose.
I have no idea what you do.
Yep. That's what you do, Haley. That's super cool. No, I like that. That's very useful piece of tool there. I think that's super interesting. Okay, let's move on to the next one, which is a equally fearful and depressing. Don't get on my case about this. I'm just reading the news, okay? It's how to protect your home from a rapidly growing real estate scam. From 2019 to 2023, over 58,000 Americans were scammed out of $1.3 billion in a fast-growing real estate deed fraud scheme that targets vacant or unmonitored homes. Criminals use forged documents to illegally transfer ownership, often going unnoticed until tax bills stop arriving. So I was reading about this. It talks here about Florida, but Dave, a lot of the other places where this is being done that were showing up for me with Boston also is like a big area for this deed scam. And it's so funny because I'm actually selling some land that I broke off from another property a couple years ago, sold the house, and I'm selling the land to a developer now. And I was getting emails from the title agent to do remote closing. And I'm like, man, like this could be friggin' anybody. It's like, it could be a total scam that they're buying. It's not, because I actually reached out to the developer. I vetted them. I know it's real, but like, just thinking about it, like with all these tools that we have, which are amazing and super convenient. I love remote closings. I'm in South Africa at the moment. I'm all over the world with our investing and where we travel and go. But, I couldn't live without it really at the moment. But at the same time, that certainly is less intense than when you used to have to go into the escrow company, spend like 2 hours sitting there signing the like 2,000 different forms physically while they read them all to you. It's a completely different experience now. And it does open up to this type of scamming. And what do you guys think about this? Like, I mean, how do we keep from having real estate investors have a bad name? Because this could really hurt, this type of news could really hurt short sellers and investors who are going for off-market deals, because you might come across like you're a scam artist, or someone's neighbor said, "Oh, are you sure they're real? They might be a scam artist. I see there's all these deed scams," right?
Well, this is not a real estate investment thing. This is just this is a realty thing, right? Any homeowner can face this, right? I mean, it doesn't say anything about real estate investment. It can happen to us, yes.
I think this totally affects real estate investors, though. Absolutely. I mean, because scammers comb through public records.
It can, but it affects
real estate investors comb through public records, right? I mean, we could be restricted to what kind of records and information we have access to for our investments from this. We could have, different restrictions added for title companies and closings that make it more difficult to transact. I mean, this could have a big impact on real estate investors. Myself, I think this is one of the most important
intent
stories on here. So
comes down to intent and what action you take, right? Every real estate investor has at one point or another considered vacant home mailings, right? We're like, I'm going to mail to them to see if I can get somebody to buy it and say, I want to sell your home. And when they don't, we just kind of like, okay, this is where my mailing ended. We put the numbers down to a spreadsheet and say, this was the strength of my mailing and whether I'm going to pursue this particular option or not. The guys that are doing that probably did that and said, I'm just going to take the home by doing forgery, right? And it comes down to intent, right? So it's somebody that obviously knew that there's these people that have probably stopped caring about their homes for whatever reason, right? And they decided to go ahead and and then it comes down to like, they still have to move it to somebody else, right?
I don't know. I mean, this is actually, I mean, this is pretty wide.
Are you going to leverage it? Are you going to
This is pretty widespread.
It can happen to anybody.
Yeah, but this is a pretty widespread fraud. I don't think this is just in real estate investors who had numbers left on their list. We're talking 58,000 Americans scammed out of 1.3 billion. I mean, that's some massive, massive numbers. I mean, this is probably a much more substantial setup and mill than that of what's going on with the perpetrators behind this. I mean, I imagine it's more organized to be that extensive. That doesn't sound like some little, small fraud going on to me. What do you think?
How do they execute? How do you transfer a deed without the right documentation? They're
forging quit claims to themselves, and then they're listing it using real estate agents on the MLS and everything else to sell it for them.
I don't know how they're pulling that crap off in Boston. We're a legal state. We're not a title company state. So you have to bring in legal representation to do the closings. That being said, not all attorneys are created equal as well. So you gotta be careful who you're dealing with. But
I found the stats for Massachusetts was 1,576 victims, losing a total of 46 million and change.
Wow. And I didn't get any of that. Where the hell was I?
I know, you're missing out, the other side of this.
Look, there's stupidity costs, right? There's a price for everything. Well,
so the thing is, though, it's not even stupidity. I mean, I think this is like people's second homes, or probably elderly people who have second homes they're not going to, or family aren't using. things like that. And there's probably a lot more of it that hasn't even been reported.
Yeah,
Because
I was going to
I mean,
say
they
that.
say they
Yeah.
think people are finding it because they don't
Yeah.
get their property tax bill. I mean, you know, I don't know about you guys, but sometimes I forget about a property or a property tax bill coming in because, like, you know, I'm sure other people do, or they don't think about it, or some time goes by, right?
So the entrepreneur in me starts thinking about an opportunity, right? So if it's that prevalent, and I don't dispute that it is, how do I now get the message out? How do I market in Boston, for example? We'll keep it local. How do I market to defeat this fraud, right?
So I think there are some services doing that. Some counties have actually allowed people to set alerts with the county's clerk's office on your property, where you can find out if there's been anything recorded against it, and they'll notify, which is a good thing to do anyway, because, you know,
any monitoring is good.
And there's all kinds of other. I mean, think of all the fraud.
Second set of eyes on there.
Jeez. I mean, there's a whole untapped other area of fraud. I don't want to give people ideas, but, you know, it's like there's things I've thought about that, like, you could definitely, you know, it's a good thing if you have that.
Bunch of vacant second homes, I would leverage it with my own. I'll just put a note on it myself.
Yeah,
exactly.
I
wouldn't let them sit there either.
That's the issue. They look for properties that don't have any liens on them, right? Because if they have liens, they can't do it. So it's paid off.
They need to have leverage.
I feel bad for the people who get, like, rented or buy one of these kind of properties. What a nightmare then they're in. Also on the chain of title and everything. Hope they got title insurance, but renters especially, man, they don't have a lot of rights when it comes to that.
If you got 5 minutes, I'll give you the short version of a horror story that relates to what you're talking about. Okay.
All right, go for it.
I owned a 4-unit property in a suburb of it was up in Maine. Okay. C neighborhood. I sell it. Cash offer, 350,000, whatever it was, cash offer, with a realtor. Then one of my tenants calls and says, some guy just knocked on the door and wanted to collect rent. Did you sell the property? And I'm like, we haven't sold the property yet. We got 50 grand in escrow. We haven't sold the property. Long story short, the guy who made the offer was a chiropractor who was affiliated with some radical group that believed that the laws of the land were not applicable to them. And basically what they did was the realtor on their side gave them a key to the property. They came in, changed the locks. They changed the utilities. They started trying to collect rent from my existing tenants and moved into the property. And we got 50,000 cash of their money on a $350,000 deal, whatever it was, a cash deal. Long story short, it took me 18 months in the sheriff's department to vacate that property, to get the problem solved, because they didn't believe in deeds, they didn't believe in the lien structure, they didn't believe in the laws of America, and I got that one firsthand. I got that.
Man, I thought I had the worst eviction story ever, but that might have topped mine.
The only good news was we kept the 50 grand. He didn't get that back. He tried to counter sue and everything, and it was just a crap show. But we kept that 50 grand, and then the period of time, that 18 months, the market went up.
It's one of those free citizens people.
450.
Nice.
So we did all right in the end. But
that sounds like that worked well for you. I mean, my worst eviction story was the tenant stole the swimming pool. So that was.
He stole a pool? Was it an in-ground pool?
It was a above-ground pool, but it was a 24-foot one with a huge deck around it, and it was gone.
I had a guy pour a 25 pound bag of Quickcrete cement down the toilet.
Oh, ouch.
Yeah.
Oh, that would be expensive. That would be real expensive.
That out of the main stink pipe.
I had a guy leave
I hope you didn't have a slab, man. Oh.
I had a guy leave a dog in a closet, and we got it after 3 days after the eviction was done. So we knew that he was there. So the dog was there for like 3 days, just in a closet, poor thing.
Aw.
Mad as hell. So we go and we hear that. I'm like, oh my God, poor thing. So we open the door and run out, like with some food out there just to calm the dog down. Just such a sad story.
That's so terrible.
He was such a nice pooch. He was a nice pooch. He was not mad. He was just like, okay, yeah.
That's one thing about
That was
real
my
estate
story.
investing is I'm such an optimist, and I want to, like, I like, continually believe in people because you have to, but like real estate investing also can really show you how awful human nature can be at times.
Oh, for sure. Yeah.
Oh.
Sure.
And on that note, our next story is Los Angeles Halts evictions once again after the fires, where they have rent collections frozen because of economic hardship caused by the January 2025 wildfires. They have a sweeping eviction moratorium once again through July 31st, 2025. So, I mean, the fires were terrifying in LA. I'm from California, and I lived in LA for many years. And seeing that was just horrifying, because it's a lot of houses I used to go to and hang out in and everything were just gone. I mean, all these places of my childhood and growing up just completely obliterated, right? But, at the same time, it's these eviction moratoriums are pretty horrible, because it's treating landlords like they don't have a mortgage to pay also, right? Like, how do you protect yourself from that? How do you, I mean, I'm sorry, Dave, you don't want me to be the fear mongering on this side of it, but there's some real things that are, I mean,
Don't invest in LA. Don't put your money into Los Angeles. I don't know.
Yeah, it's so funny. Like,
California, for that matter.
Yeah.
California. Yeah.
So when we were in the car
California,
today,
for that matter. I mean,
I was talking about that with my husband. I'm like, like the one place that I know there's like good deals, but I wouldn't invest. I know you invest there, Dave, so don't jump on me again. Is Florida, but it's not because of the lack of deals. It's because of Florida man, right? Yeah. And I don't want to deal with Florida man. And my husband is like, oh no, for me it would be California. I don't want to deal with all the regulations and the regulatory stuff. I mean, I started my investing in California, but I sold my last house in California probably like 10 years ago at this point, it's, just crazy world. I
listen,
mean,
California is an absolute equity state. Like, we haven't had cash flow for decades since, I guess, after the major 2008 recession ended. After that, we haven't had cash flow. We just don't see it. That's why we go other places, because like when you look locally, it's like it's almost impossible for a newbie investor to break out. And we have Silicon Valley, right? They make tons in terms of income, and they have phenomenal, disposable income or investing income, whatever you want to call it. But it's impossible for them to invest anywhere in California, because it's such a high price. So it's like, where else are you going to go? I'm like, well, that's a big country. That's a huge
and maybe
country.
That's why they
the Midwest
get away
is wide
with all
open.
these rental freezes now, is the majority of investors in California have these high-paying jobs, so they have cushion and they're not, losing their shirt. But I just hope that doesn't spread to other places when there's disasters and other things like that, because it's really, taking from Peter to pay Paul, right?
I can tell you for a fact. I mean, Washington and Oregon are right there, and Arizona is about to topple too in terms of the local cash flow being absent. So I don't know. I don't think Dave was here at that point when I made the stat, but like there are 380 metro areas total in the USA, and 180 of them currently are such that investing locally does not make any sense.
Mhm.
So that's about 110 million, about roughly 1/3 of USA. So remote investing is the only way they can go. So, I mean, when I say California, it's California, Washington, Oregon, all of them.
I was just in Southern Oregon getting my mom's house ready to rent, cleaning it out and everything. I'm keeping that house and renting it because I actually think the values there are pretty low. That I was looking at the market and I would buy rather than sell, and that's always been my rule. Another old stock investing rule that you'll recognize, Dave, is if it's not time to buy, it's time to sell, right?
Sure,
But
sure.
the other way
discount.
around, if
We
it's like
only
I
buy
look
at
at
a
a
discount.
market, if
Yeah,
I look at a
yeah.
market and I would still buy there, I'm not going to sell the property that I have there, right?
Yeah.
But
Look, the natural disasters.
That's
That's what you're talking about. That's what you're talking about with LA. That's what we talked about with COVID. That's what we've talked about with the hurricanes, tornadoes, floods, everything of that nature. Worst case scenario, Gavin Newsom's going to step up. He's going to throw some money at it. You know what I mean? Just like the Biden administration threw money at the COVID crisis. The government will pull out its wallet and they'll mess up the economy again. And, we'll deal with the fallout, et cetera, et cetera. But, I've even in my own market, like to buy and hold in Boston doesn't make sense for me. To buy and hold in, Connecticut, New York, those states just, it makes it hard. So I don't know. I'm reading these notes here.
I'll give you one example of how I made phenomenal bank because of natural disaster. I invested in Galveston, Texas after Rita. And at that point, when Rita hit, there were lots of properties. I don't know the number, but lots of properties that they could not tell how the property was destroyed. And they had dual insurances, policies. So flood and wind. And in a lot of cases, both paid. So there were two insurance checks coming their way. One paid off the mortgage, other one went to bank, and they still have the asset.
Yeah.
So we bought properties out there 10 cents on the dollar. And if you had a property that you can buy that was 2-story, the bottom was all waterlogged and destroyed, but the top, FEMA is excellent in those times because our even with half the property operational, we were cash flowing. So we had to do some capital expenditure to kind of go, but at 10%, you put capital expenditure, it doesn't matter. It's gonna pencil. So it was brilliant. It was awesome. But we didn't realize when we mailings that there were people out there where both the insurance policies were going to. So we started like getting phone calls like, yeah, we'll sell. So it was a good time.
Sounds like but, the right at times, kind of opportunity.
There are people so I'm not taking lightly. There's people that actually passed away in that and stuff. But opportunity, yeah.
Yep. All right. Let's keep moving here. We had mentioned Oregon. Our next news case is a second man pleads guilty in an $18 million Oregon real estate fraud case. This one is from Coin News, KOIN. And in this one, Robert Christensen of Sherwood, Oregon, pleaded guilty to conspiracy to commit wire fraud and money laundering in an $18 million real estate fraud scheme, joining co-owner Anthony Maddock of Damascus, who previously pleaded guilty. So this one I did some research on, and this seemed like a pretty straightforward Ponzi scheme. These guys were doing like, a BRRR, the buy, rehab, rent, refinance type of gig. And they were offering 8 to 15% interest on 30 to 90 day loans.
What?
So Yeah, I mean, anybody who invests in that and believes that is kind of that sucker that born every minute, right? So it's yeah, seriously sketchy right there.
Yeah, at one point, I don't know.
Well, you said you were given high interest at one point, so it's not always impossible, but that's a little crazy, like 8% over 30 days, right? If you're doing that over and over again, like you're not going to rehab, rent, and refinance a property that fast, right? Or am I wrong? Like maybe there's people out there who can do it. I think you'd have to be kind of a miracle worker. So
I don't know how you can get that much deal flow at that much of a discount that you can pay that much return. So, again, it's education, right? There's a lot of noise out there. Look, one of my favorite shows is American Greed. You ever watch that one with Casey Steach? Steach is that Teach? Stacy Keach.
Yeah, yep.
Bob was on his boat. Dun, dun, dun. You know what I mean? It's like, every day. What if you just worked hard at doing it the right way instead of being a scumbag? What do you think? Wouldn't that be nice? Wouldn't that be nice if there were more people doing that? What if the Russian and Chinese hackers used their skills to develop good SaaS that made life better for everybody in business instead of stealing deeds and creating fake documentation for stuff? I don't know. I'm tired. I'm tired of these a-holes coming in and messing up our game. You know what I mean? Take them out back behind the bike shed.
And at one point, because we have the same label, label like real estate investors, realtors, I'm in real estate, whatever you call it, when we're lumped together with all of them saying everybody's the same, it's like, no, please. I mean, it's not. I mean, we take real heat for everything, and we are so afraid most of the times, like, oh my God, I'm not going to do this. Oh my God. Well, it's the same thing. We stay awake at night, staring at the ceiling, thinking what can happen, not making sure.
All right. Well, let's not think more
losses.
Yeah. Let's not think more about the sky is falling. Let's move on to the next one, which is the worst places to live in Florida for families and retarees in 2025. Another super uplifting story. So
who comes up with all of this stuff? Who is it? I want to talk to him.
This one is from Narada Real Estate Investments.
Oh, sorry, Antonio. I love you. These are awesome.
Narada's I know him. I know him.
He's So, I mean, come on. I mean, in my view, like I said before, Florida is not my favorite place. So it's like, what city in Florida wouldn't be on this list is my way of looking at it. But you guys are more in the Florida game and have,
what is it? Is it still, Tapan, you got your finger on this pulse more than me. I mean, number one retirement destinations are still for U.S. to the best of my knowledge, still Florida and Arizona, right?
Still the villages.
Yeah, the villages. Oh, by the way, I know a statistic about the villages that I don't think I could share on this podcast.
Oh, you're talking about the ST? Oh, yeah.
The STDs, man.
Yeah.
That's crazy, brother. That is absolutely
crazy.
It's got the highest STD
rate
anywhere in the country is in the villages, the number one retirement community. All these old people misbehaving.
And all of them are 65 plus.
Yeah.
65 plus.
Wow.
Isn't that nuts?
Well, that's
I tried to get in there. They wouldn't let me in. I'm like, I'm a swinger.
You're looking to get your next STD there.
It's like not Florida man. It's like Florida people.
Yes. Florida people.
Crazy.
Yes.
Crazy.
The only STD I have is life.
Yeah. Anyway, we digress. I think Florida's still good.
Yeah.
Florida's still good. That's where we go. What I liked about Florida was, look at him with the commentary. It's getting loose. Watch out. What I like about the Florida market.
For the audience, let me say what that was. It's our producer Antonio added in the comments, retirement communities equals swinger communities.
That's right. That's right. They have a different education at that age. You know what I mean? They don't have all the education the kids get. I got a 15-year-old and he's just like nuts. And I'm like, dude, you got to relax, man. Love will come the right way. Don't know. Stop it. Anyway, what I love about Florida is the amount of service positions that a retiree, generates. If you look at the healthcare community and drive in Florida, obviously it's there for the older community. The landscapers, the dental, all of those retail, restaurant workers. If you've got this movement of retirees, it brings a wave of necessity behind it. So, again, that's why we're in the build for rent space down there, as well as repositioning multis. So I still like Florida. So
it's a good market. Yeah.
It's like this. Not every job created is equal. Not every population increase is equal. Like if there's an engineering job created in a particular neighborhood, it brings at least 8 to 12 other associated jobs to support that job, right? Really? So okay. Same way, yeah. So similarly, if a retiree creates a lot more accessory jobs than a family moving out there.
Gotcha.
So
interesting.
To see the nitty gritty is in what kind of jobs are moving there, and the population is increased, but what
retirees
what segment of population is
right? Families don't have any money to spend. Kids are expensive. Yeah.
Yeah, they are.
Yeah. So especially this realm. All right, let's take the break, and then we'll come right back and try to wrap up this show with our amazing guests. So, Antonio,
are you looking to elevate your business through exceptional content? Universe Media Publishing is your gateway to success. We understand that in the world of business, content is king, but not just any content. Your business deserves content that captivates, convinces, and converts your audience into clients. At Universe Media Publishing, we specialize in crafting SEO-rich web content, persuasive copywriting, and marketing copy that resonates with your audience. We don't just write, we engage, we connect, and we deliver results. Imagine your brand's voice amplified, your message crystal clear, and your presence dominating the digital landscape. That's the power of partnering with Universe Media Publishing. Don't let your business just blend in. Stand out, be heard, and make an impact. Connect with us at Universe Media Publishing, and let's turn your vision into reality. Visit universemediapublishing.com today. Your story, our expertise. Together, we'll create magic.
All right, welcome back, everyone. So I think we should hop down to the news item. Speaking of Florida, right, about the Miami River District landing $1.3 billion Saudi mega project that promises 3,000 apartments and a sky bridge hotel soon. So this is a story from United States Real Estate Investor that a $1.3 billion Saudi-backed mega project is reshaping Miami's River District with plans for 3,000 new apartments, a dazzling sky bridge hotel, promising major economic growth and cutting-edge architecture. So while developers envision a new luxury hotspot, critics are sounding alarms over the environmental toll and infrastructure strain. Must be all those Californians who moved to Florida there, right? With sustainability and seamless integration into the existing communities still in question, the success of this high-stakes development will depend on strategic planning, eco-conscious design, and public acceptance. Investors are watching closely, drawn by high returns but wary of risk. This could redefine Brickell's future or overwhelm it with unintended consequences. So, Dave, I have to agree with you. Florida is an awesome place to invest because where the Saudis are putting money, man, big things are going to follow, right? I actually just got back from Qatar a few weeks ago, and it's crazy when you look at the investments in like the Middle Eastern countries, what gets built there, the style of the building. I mean, it's pretty unreal to go into some of these buildings. They really blow away anything in the U.S., in my opinion, the kinds of things you see in the Middle East. So I think it'll be interesting to see that happening in, Miami in the River District, right?
So
We're not talking about the beach
they're
here,
just
right?
now realizing the importance of a sewage system.
Yeah.
Yeah, yeah. You got to make sure your septic works really well. I've at arm's length had a couple of conversations with some of those groups, and they don't need cash flow, right? They're building equity. So, these massive projects that get taken down with the guy who can, allocate $3, $5, $10 billion for an investment strategy, they'll go into a negative return profile for 5 years before they turn a corner. They'll sit another 5 at 3 to 5%. And then the next 5, that's where they start really making their money on that investment. So, there are scraps around there that are good for us, right?
For sure.
You see a valuation of 12 unit assets increase within a quarter mile, half mile, 1 mile radius of something like that going up.
12 units are too small. Nobody's going to be wanting to live in that when you can have really what you should be doing is buying up properties that are, attached to one another to be able to sell to other developers who are going to come in. Because once you have one mega development like that, people are going to be looking for big parcels in the nearby area to add more properties, because that high-end luxury real estate attracts more of it in the surrounding area. But nobody's going to want the 12 units,
Agreed. Other
Than
the people who need to live in the 12 unit to service the people who are in the great big new development, right? So where are they going to live? They still got to live too. It's it's a good problem to have in Miami. It really is. It's a good problem to have as to what we're going to do with the real estate around it if we're not participating in it, right?
If there's any developable land that will be affected upwards by this development, do you think they have already not acquired it? If they're taking this huge, I would call it a gamble. They probably don't. They're probably at a whole different level. But it's like, if they're taking this level of an investment risk, they are probably poised to take advantage of any and every upside that they can have from that.
I don't know. So, from my experience with these types of developers in the past, like these kind of things, they tend to be, a bit of a ego project, right? This is like the kind of, they're like the kind of like building that you own for bragging rights, right? Like what Dave is saying, it's not about cash flow, it's about making something amazing. My worry on something like the 12 units nearby is if you're not assembling the parcels that are adjacent, then the government could come in and do eminent domain and hand your property over to the competing developer from Dubai, Qatar, wherever else, who also wants the extreme lifestyle property next door. So, I'd be real cautious on picking up scraps unless you're doing it with some serious bucks behind you and working for one of these Danube type of companies or something like that to be assembling parcels for them, because you could put a lot of money into rehabbing a 12 unit that ends up not really giving you the rental value and then get paid out pennies with eminent domain, right? So.
Yeah, no, I get it. Look, for us, I'm going to go back to part of what we were talking about before. It's always chasing and protecting the delta for the investors. I've tried Miami. We've been down to Miami. We've put in offers in Miami. You can keep Miami. I don't want Miami. You know what I mean? But when I say scraps, when somebody comes in and makes a big move like that, it creates a downwind opportunity from other businesses.
I'd say the downwind opportunity is the wealthy neighborhoods nearby there, because those areas are going to go up in value big time.
For
I,
sure.
I
Yeah,
don't
for
know
sure.
that local market very well, but whatever is like a reasonably wealthy neighborhood that has like the 3,500 square foot houses in it, like those areas are going to go way up once that's built, because that will be, you know, your Beverly Hills type of houses that
I was
are
going to
near
say that.
that
Yeah, it's your
wall,
Beverly Hills right there.
right?
Yeah, no, I
Right.
agree with you.
All right,
I'll give you a nice thumb rule.
But let's move on, because we only have a few minutes left. And I really want to talk about this last one, because this is one of the main news items of this week that I know all our listeners have been hanging in here to hear about, and is like a really big issue right now. So there's a new law. This is from Fox News. There's a new law that would stop foreign adversaries from buying up our country while Americans can't afford homes. Lovely framing there. So Congressman Pat Harrigan has introduced the Real Estate Reciprocity Act to combat foreign adversaries buying U.S. land while banning Americans from doing the same in their countries. The proposed law would impose a steep 50% tax on foreign nationals and entities with government ties from nations that restrict U.S. property ownership. Countries like China, Saudi Arabia, we were just talking about, and Switzerland currently bar or limit foreign land ownership. The bill also mandates IRS disclosure and an annual State Department report on foreign reciprocity. As housing costs soar and Americans struggle to buy homes, the legislation aims to prioritize domestic buyers and protect national interests. So right there, they're saying we're trying to tank the housing market, right? In a you know, much more pretty wrapping paper, but that's kind of like saying this is our intent. We're going to drop prices. Let's wreck value in the housing market, right? So what do you guys think about this? How do you think this is going to pan out? I mean, you know, it's just the start.
I'm a naturalized citizen of the U.S., right? I'm an immigrant from England. I got my sponsorship. I carry an American passport. Blah blah blah. So, like the red, white, and blue in me gets stirred up, right? You get on the Trump train. You know, can't let the Chinese buy the land. Communists, right? You can't let the Saudis buy up the land.
They already owe a ton of it, right?
I know, right? The Catholic Church used to own something like 90% of Manhattan, I think, at one point, right?
Yeah.
I don't know that you're gonna get the wherewithal to restrict as much as that commentary sounded like it wanted to restrict. I'm going to be honest with you. I like international investors coming into my deals. I don't know whether they're now barred. You know, we have some nationalities that can invest with us and some that can't. But, you know, that's such a big picture. You know, it doesn't affect my daily routines, but, you know, my radar is up to now pay attention. That's for
I can tell you.
But, go ahead.
I have some data on this. So the
Yeah,
EB5 investments, right? The foreign investment, the EB5 investments. First of all, like about 68% or so goals of a foreign investment, they all go into luxury markets. So when they say they cannot afford homes, I don't know if that's even a thing. Right?
It's not.
There's nobody like coming in from and buying up like your 2-1 in the third suburb of Tampa. That's not happening.
Yeah.
No, that's all the hedge funds
like
that are buying the 2-1s
right.
and renting them for exorbitant prices because they control a market. I mean, that's not the foreign investors. That's hedge funds. That's U.S. investors that are doing that stuff. You know, like when I lived
doing it with foreign money, Crystal.
Yeah,
they're doing it with foreign money.
Well, maybe they are, but this isn't going to stop that. That's for sure. You know, but you know, I mean, when I lived in Hawaii,
and that's
there were all these luxury condo buildings, and they were owned like 90% by Chinese investors. And you drive by, and they'd be all empty. You know, they wouldn't have any furniture in them. They're just investments, and you like see them all sitting empty, no lights on in them, no furnishing, nothing. They're just sitting there as like foreign investment. I mean, that's the properties, right? But those aren't your mom and pop kind of properties that are driving up day-to-day prices. Who's going to live in that, right?
they come in, but they also leave. A lot of them leave. I have a example. My ex-father-in-law, he bought an avocado farm in Maui, in Kihei, right? And it somehow came with this algae energy converting factory on it. It was owned by a Japanese company, and they basically like, we're done. At one point, a lot of them are also like, we don't understand this. Just the way people locally do that, right? Americans do that. They're like, I'm done. They also do that. They're not that different, right? So it's like we would buy from them at a price. It doesn't matter. Like, I think this is absolute. Like a lot of it is like posturing, political
It
posturing.
is. It's
That's
feel good measures so that people feel like the government's doing something for them. I mean, first of all, like I've done lobbying, like I've worked in Congress. I read tax laws because that's like my day-to-day job is to interpret tax laws for business investors worldwide. But so like it takes a long time before something like this actually becomes reality. So I don't think we have to worry about it now. It's just it's just kind of entertaining, and it will be interesting to see what rules come in down the road as things change and progress and new laws actually get written. And a lot of times this is just fishing expeditions to see which ideas hit the public and they get excited about that. Government officials can make it sound like they're doing something good to get reelected, right?
Sure. Don't you remember when
True
the last
wanted
administration?
to.
Go ahead.
Sorry. Like if you truly wanted to help people that cannot afford homes, tell me how many new mobile home parks would you approve in those neighborhoods? And see every NIMBY a-hole kind of go up and say, no, not in my backyard, right? Make a law that there will be at least 20% of the delta of affordable housing for the metro area will be developed every year, or will be allowed every year, to be permitted every year, and then see what happens.
That's exactly what it is, though. People say they want affordable housing, but not in my backyard, right? It's that NIMBY.
Not in your backyard. They
want affordable housing, but not here. No, definitely not in my town. Like, I don't want those people living here.
Put those guys away from me where it doesn't affect my property values. And, there's some wisdom to that.
It's one of my all-time favorite books is Robert Greene's The 48 Laws of Power. And, in that book, there's a section that's, if you want action, you appeal to people's self-interest, not their sense of goodwill, right? Everybody talks a good game. They want affordable
housing. What's in it for me? What is in it for me?
Right? Come on. Yep.
W-I-I-F-M.
All right. Well, on that note, I know we're out of time, and Dave, you got to hop off here at the hour. So let me thank our sponsors, United States Real Estate Investor Advertising, of course, Accelerated Capital at acceleratemycapital.com, Universe Media Publishing at universemediapublishing.com. And thank you guys so much for joining. Dave, I know you got to hop off. So Dave, it's been amazing to have you here as a guest. Do you want to tell us a little bit at the end here of how our viewers can get in touch with you, find out more what you're doing with Foundry Legacy Alliance?
You can find us at legacyalliance.com or legacyallianceclub.com. You can find us there for the education components that we have. And our investment platform is at freedomventure.com. Or Google me. You'll find me. I'm not in the America's Most Wanted anymore, so it's good. Take care.
Amazing.
Tapan, it was nice to meet you, brother. Thank you as well, Antonio. God bless.
Yeah. All right. And Tapan, wow. Also, it's been amazing having you here. And tell us a little bit more about where to invest and how our viewers can find you. And I mean, this amazing product you have. Yeah. So
just go to wheretoinvest.io and take a look at what we have. If you are in one of those places where you are looking to invest someplace else, not where you live, we will absolutely make sure that you get the best deal. And our subscriptions start at $50. That's all. So
amazing. Yeah, sounds like such a deal. Just for that one analytics product we were talking about that can save you money by knowing what the investment rates are going to be before you invest in an area. That's amazing. I definitely would subscribe just to be getting that. So that's incredible right there.
yeah,
So anyway, thank you, audience.
Thanks so much.
Thank you,
I'm
audience,
just saying,
so
Lisa,
much. Yep. Thank you, audience, so much for listening to us and being here with us for this couple hours. This has been a really fun show, and I'm honored to be here and be the guest podcast host while James Brown couldn't be here today. And be sure to follow and subscribe to This Month in Real Estate Investing at thismonthinrealestateinvesting.com or on your favorite podcast app. I know that we're on Apple Podcasts, we're on Spotify, so lots of places for you to follow, keep up with this great information every month. And like James always says, remember, when one door closes, another door opens to financial freedom.